Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon, hello and welcome. This is Your Stocks. I'm Mangla Malu. With me is Sumaira Abdi. Sumaira, good afternoon. Good or not depends on what side of the spectrum you are on, right? Because if the Nifty, if you take a look at that, the frontline indices, both of them at the low point of the day. Reliance, for instance, is dragging that index lower. Pharmaceutical stocks too, Lupin currently at the low point of the day. But if you're someone who is looking at the mid-cap index, well, there is a fair amount of green there. Though we're off the high point, a lot of individual stocks buzzing around. MCX is at the high point of the day. And then from the small cap space, we have 63 moons. That one too has surged and is locked in upper circuit. 2 stocks in the green for 1 in the red.
That's true, actually. But let's get started. Let's see what's happening in our own market. These are the top stories. Market at the day's low. IT, pharma and banking stocks lead losses. Mid-cap index continues its outperformance, though it's off of the highs. Let's get started and answer all the queries that have been sent in by our viewers. We have our 2 experts joining in. Rajat Bose and Vijay Chopra are here to answer all the queries that are being sent in. Gentlemen, good afternoon to both of you. First up, we have a query coming in from Pranav Modi, who writes to us from Ahmedabad. He says he holds 1,100 shares ouch of IDFC Bank, which he has bought at 77 rupees a share. He's been holding for a year. He's a long-term investor and wants to know whether to hold or to sell. So it's a near 30,000 rupee loss that he's making. Vijay, let me come to you on this. For somebody who is a long-term investor, what does he do now with seeing a loss as big as this?
Well, I still don't see a lot of problem in IDFC. He can average around, say, maybe 45, 50 odd levels, and whenever there is some more correction in the market. This stock has the capability and capacity of going back to 77, 80 odd levels. So all he can do is that in a correction, he can bring down his buying cost and sell it when it goes higher. And if he's a very long-term investor, I think that IDFC is one of the newer listings in the banking universe, and I'm sure that they do not have that kind of a book which is we are so worried about in most of the older banks. So again, with a longer term perspective, if he brings down his average, I think that IDFC can go up, and it is a good possibility that with a maybe 4 to 5 year horizon, you can see the stock going to maybe 125, 150 odd levels also. But yes, he has to wait for some more time. Wait for a correction and then average.
Wait for some time, wait for correction and then average. Let's go across to Rajat as well. Rajat, what's your view on IDFC Bank? And if I take a look at both IDFC Limited and IDFC Bank, both of them trading at around that 50 rupees mark, which one do you think is better poised for an upside? What would you recommend?
See, looking at the chart, looking at the price movement for the last few days, it appears that probably IDFC Bank might well do well, but for that I would suggest a stop loss below 44. That would be a better stop loss, but otherwise one can put a stop loss below 48 on closing price basis. That is another way of doing it. But only thing, Mangalam, I would say that unless it crosses 52 to 54 supply zone, do not expect much of an upside movement. Maybe the whole pullback rally could be capped around those levels. So because he is losing such a big money, that's why I suggested a lower stop loss and continue to hold on. But I wouldn't really suggest averaging here because the stock looks pretty anemic.
All right, we'll keep an eye out on that. Just watch out for the markets. The mid-cap index is rapidly giving up its gains, now up just about 60 points. In fact, the advanced decline lines as well have narrowed a little bit, 1.8 stocks, so to say, in the green. Now, let's move on to the next one. We have Chaitanya B writing to us from Mumbai, holds 150 shares of Heidelberg Cement at 98 rupees a piece. For the last 3 years, long-term investor, wants to know whether to hold or sell Heidelberg Cement. Rajat, what's your view? He's sitting on a fair amount of profit, 8,000 rupees thereabouts, but it's been the last 3 years. What would you recommend?
If you look at Heidelberg's chart, you will find that after the surge in mid-October, then it went into a range-bound scenario. In between, there had been quite a bit of volatility, but it is over I mean, over a period of 5 months, what I can see is that some kind of a distribution is happening, and as such, cement demand is not very encouraging these days. So my suggestion would be to actually book out, because he has got substantial profits here, and if at all he intends to continue holding on, then the stop loss should be placed at 145. It's a profit protective stop loss, and once it goes below that on closing price basis, he should exit.
It makes sense. Vijay, you concur?
Well, I think that it is one of the good cement players in the mid-cap space. And as suggested by Rajat, and I also feel so, that, there could be some kind of a correction here or there in the market. So definitely work with stop losses. This is a general suggestion for all the investors. But I think that Heidelberg Cement, if there is no crack, and probably if market starts looking up from here, this stock has the potential of reaching 190-200. So again, with a strict stop loss, stay invested. And this gentleman seemingly is a long-term investor, 3 years already holding. So good probability that in a quarter or so we might see some kind of a pickup in demand in cement as well. And this stock can go up to 190.
Now about 40 points lower on the frontline indices. The Sensex has expanded its loss to about 100 points now. And look at some of the stocks. So this metal pack is also now coming under pressure. So we have Tata Steel as well as Vedanta, which are now sitting at the low point of trade. And even, a lot of these cement companies, so like, say, an Ultratech Cement, that's testing its 200 DMA, as well as from the broader market, there's something like a Shree Cement, which has now seen a sharp decline, sitting at the low point of trade. But let's get back to answering some of the queries that are being sent in. Monish Suri writes to us from New Delhi. He holds 15 shares in Force Motors, which he has bought at 4,000 rupees about 6 months ago. He's a medium-term investor and wants to know what he should do, given that he's making about 18,000 odd in terms of a loss. Rajat, let me come to you on this. For a medium-term investor, what's the word on Force Motor?
Well, Force Motors, after a good run over the last few months, it has come down to retest its 200 exponential moving average. 200 exponential moving average as at the end of yesterday stood at 2871. It's trading below that. My point is that this is the first test after the 200-day was breached and there was a good upside up to 4,000. So from here one can expect a pullback rally, because whenever the 200-day exponential moving average is tested for the first time, you generally get a pullback rally like the one you are experiencing in the Nifty, although it's now losing steam, but still there would be a rally even for an individual stock like Force Motors. So on a rally, if it fails to actually move up further, at that point of time one may consider exiting. Otherwise, if it were to fall below, say, 2,700, then seek an exit.
All right. Okay. Wait for the level that Rajat has spoken about, the 200-day moving average. Vijay, the stock has been a 10-bagger between 2014 and 2017. Now it's corrected a bit. Do you think it's an opportunity to get into Force Motors?
Well, as I said earlier, there is a possibility that markets might correct a bit. And in a correction, I think that nothing has gone wrong with a company like Force Motors. It has corrected, and I think that this correction can deepen. I think that it can be averaged around say 21 to 2200 levels, and if at all it comes there, and then you bring down your buying price, and it's a easy exit. And I'm sure the way all the auto sector is behaving, and the way projections are. Look at what has happened with the Choke Leyland, likes of Maruti, even Eicher Motors. I think that there is a good chance that there's a revival in the entire auto space in the coming few years, and motors can definitely go back to maybe 4,000 odd level. So average could be done, but again wait for a correction to happen. Around 2,200 would be a great time.
Cuts for the private sector banks, the Nifty Bank at the low point of the day. That's because Yes Bank, that one should come up for you, is also at the low point of the day. So we'll keep an eye out on that. It's the weekly options expiry. But let's move on to a new query that we have right now. We have Rahul Kumar writing to us from Hyderabad. holds 140 shares of Lupin at 900 rupees for the last 1 year. Long-term investor wants to know whether to hold or sell. Rajat, Lupin, what's your view? It's corrected 50% from its 52-week high, below all the moving averages. What would you say? Well, I think, Rajat, can you hear us? All right, I think that feed is snapped. We'll go to Vijay. Vijay, Lupin, what is your view after the correction, 50% lower from its 52-week high? Pharmaceuticals is a good space to be in right now, or stay away?
Well, I won't stay away. You know, pharma as such, I think that it is in the process of getting bottoming out. And there is a good possibility that, you know, the quality pharma companies might start bouncing soon. And we have seen, you know, some spikes in Wockhardt Pharma and other companies. But I think that it's round the corner. So if the person has waited for so long, it is a good possibility that, you know, pharma might start bouncing back soon, because, you know, there would be some sectors which would lead. IT definitely seemingly should lead in 2019. So hang on there. And I think that, you know, he should have a stop loss of maybe 750 odd. And he should hang on there, and there's a good possibility that you know, the stock can reach back his earlier levels.
All right, so that's the
that we're getting from Raghuvansh Kumar Sharma, writes to us from New Delhi, wants to buy 10,000 shares of Shree Renuka Sugar for the long term. Wants to know when is the right time to enter the market. Rajat, sugar, Shree Renuka, on top of that, a lot of those you know, corporate restructuring plans happening out there. Technically, what do you think is the right time to get into Shree Renuka, or should he get into Shree Renuka?
See, over the last several months, it has been very flat and moving around its 200-day moving average. So, if he is so keen to buy this sugar stock, he should buy at current prices, because it is a flat stock and consolidation process is on and it can continue.